Hi, welcome back. In our last video, we did the adjusted trial balance, and we were very happy to see that indeed our debits equaled our credits, and now we can go on to the adjusting journal entries. The adjusting journal entries are necessitated possibly because there's an error, but usually, and we'll certainly correct the errors if we identify them during our account reconciliation process, as I'll demonstrate in a second. But usually, what adjusting journal entries result from is the economic events that have happened due simply to the passage of time. I'll show you what I mean. I'm going to do the first, and then I'm going to ask you to go ahead and pause the video and complete the project and see how you do. Okay, so when we start the adjusting journal entry process, we can go, okay, cash. Well, cash, I've done and we'll see in this course how to do this. We do a bank reconciliation, and indeed, the reconciliation said that the balance is $132,600 in the bank, so that is correct, and we do not need any adjusting journal entries. Accounts receivable. The accounts receivable balance is $1,500, and indeed that is what the customer owes us at the end of the month. We prove that, and we believe it's collectible, so we don't need to reduce it by any amount, report it for the net that we expect to collect. Therefore, there's no adjusting journal entries, and the adjusted balance will be $1,500. And again, this is nothing earth-shattering. This is what's already in our general ledger accounts. Bicycle inventory. We went to the showroom, and we went to the warehouse in the back room, and indeed we have the 90 bikes left that are $100 a piece, and so the bike inventory is $9,000. Prepaid rent. Prepaid rent, we paid $12,000 on the first day of the year, and that allows us to use the building for 12 months or $1,000 a month. Okay, this is the first time when this is not correct at this point in time. We have incurred rent expense every day, and now it is added up to 1/12 of a year or $1,000. Okay, so that'll be our first adjusting journal entry. And so these adjusting journal entries go into the general ledger. So I went ahead and did the rent expense debit. So the date is 1/30/20, and these are adjusting journal entries at the end of January. And adjusting journal entry number 1 increases rent expense by debiting it and decreases prepaid rent by crediting it. The explanation for that is that it records rent expense for the month, which is 1/12 of the $12,000 rent for the year. And indeed, that agrees with it's going to have $11,000 balance after we post this to the general ledger account. And that's the 11 months we have left to stay in the building, the right to stay in the building. And we pay $1,000 a month for that right. Okay, so now we have a reminder over here to post these, and we need to post them to 2 places. First thing we're going to do is post it to the prepaid rent is a credit to the adjusting journal entry, and rent expense is a debit in the debit column for $1,000. Okay, so I did those 2 in my accounting spreadsheet. And after we post these to the ledger, prepaid rent is going to be $12,000, and rent expense will be 1,000. And so keep in mind, I'm sorry, that's 11,000. Sorry about that. You have that when you did this, you'd have got it right. So that's 12,000 the balance was, and we, in the adjusting journal entry, we credited it by 1,000, and that leaves 11,000. And rent expense is 1,000. Okay, so we've posted it to the worksheet, but we need to post it to our general ledger, and I have done it here. There's the prepaid rent credit for 1,000, and therefore the balance is 11,000. Okay, we also need to go to the rent expense. We need to go to the expense accounts within our general ledger. And there is the rent expense debit, adjusting journal entry number 1, which occurred on 1/30/20, and that leaves a balance of 1,000. Okay, so now, by virtue of that, go back to our journal and indicate that indeed we have now posted this journal entry to both places. Okay. At this point, I hope you will pause this video and do the rest of them. Give it a try. Go through that balance sheet and say, is that the right account balance? And if it isn't, adjust it. When you're done, come back and watch my video and see, and hopefully you have the same thing and you will just reinforce your knowledge. So I'll see you in a few minutes. Good luck. All right, welcome back. The next account, hopefully you found this, is equipment, and it has a balance of 12,000. Now, that account, you'll learn, stays at its historical cost. So we still have all that equipment, and that's the correct balance. Accumulated depreciation, though, that starts to add up with every month we use this equipment. So after 1 month, we do have accumulated depreciation. That is not the correct amount, 0. We have used the equipment a little bit. And here is the entry that I made as a result. And hopefully you have the same thing. The adjusting journal entry debit is to depreciation expense. And the credit is to accumulated depreciation, which is a contra asset account. So it's the beginning of the expensing. Sorry, I put that contra asset over here. It's a contra asset account. And so this is reducing the net value of the equipment by $100 from $12,000 to $11,900. There's the calculation of depreciation expense. $12,000 was the cost. It's being depreciated over 10 years. That's $12,000 per year. And we have gone through one of the 12 months in the year. So that's 100. And we need to now post those. And we can do so. Here is the credit to look, I put accumulated depreciation in red for you to indicate it's a contra asset to remind us. And so it always combines with this account to get a $12,000 minus 100 or $11,900 carrying value. There's the $100 credit by virtue of the adjusting journal entry 2 that I'm posting right now. That was done on 1/31/20, and as a result, on 1/31/20, the balance is a credit of 100. The other side of that journal entry was depreciation expense. And there is that debit, posting that debit to journal entry number 2 for 100, and that gives a balance of 100 in depreciation expense. Okay, hopefully you have the same. And now we also I'll post it here. $100 credit to accumulate depreciation and $100 debit to depreciation expense. After you have posted those, you may now indicate that you have posted both sides of that to both the general ledger as well as the accounting worksheet that reflects the general ledger balances. General ledger, the accounting worksheet is just helping us to close the books. The general ledger is what's key. Okay, and we continue on in the process of analyzing our accounts to see if there's anything else that we need to do. And by the way, we can bring the $100 credit over for the adjusted trial balance for accumulated depreciation. That brings us to accounts payable. Accounts payable, indeed, I looked up and verified that we do still owe our vendor $2,000. So that's correct. No adjustment is needed, and that will be our reported balance. Unearned rent revenue currently has a value of $3,600 in it. Remember what that's related to. That's related to the prepayment up front from our tenant to use a part of our building to do their business out of. They're paying us $300 a month. So we have actually now earned $300 of this $3,600, and so we can reduce this liability by a little bit. And I did so via this adjusting journal entry to reduce the liability by debiting it and increase the revenue, rent revenue, by crediting it. My explanation is to record sublease rent earned. That's $3,600 a year times 1/12 of a year. And I apologize for this. This copied that in. That's going to come up later. Apologize for that. Ignore that. Okay, let's post that to both places. Here's the posting of the unearned rent revenue debit for $300, which brings that balance to down to $3,300, which reflects exactly what I want it to reflect. That's 11 more months at $300 per month. So we agree on that. And we now have a little bit of rent revenue earned. So I also recorded that by the credit to increase rent revenue by 300. That's adjusting journal entry number 3 made on the last day of January. And so there's the balance now that will be carried forward into February. I'm sorry, well, that's incorrect. This is a temporary account. It will be closed to retain earnings when we do our closing entries in a little while. I apologize. Okay, let's also post that. So we now have posted it to the general ledger, which is most important, since we could always use the ledger balances to do the unadjusted trial balance. But let's post it right here as well. Unearned rent revenue is reduced by 300. I'm sorry, I put that in the wrong column. Sorry. And its balance is now $3,300, $3,600 minus $300 debit. And we have rent revenue down here, which is a credit. We earned $300, and that will be the balance on the adjusted trial balance. And that's correct. It started at 0 from the entries during the month. We added 300 in this adjusting journal entry, which brings it to a balance after the adjusting journal entry of 300. And that's why we call this the adjusted trial balance. It's after the adjusting journal entries. All right, let's move forward some more. All right, where were we? We are looking at the interest payable account at this point. It's another liability, and it currently has a balance of 0. Well, I don't think that's correct, because I know we took this loan of $60,000 and we pay interest at 10% on that. So something has accrued. We're going to need to make a adjusting journal entry here for interest payable. And I have done so by virtue of this debit to interest expense to increase it by 500 and a credit to interest payable to increase that liability by 500. The explanation is to accrue interest on the banknote payable. The amount, little support for the amount, I said, okay, our loan is $60,000 and we pay 10% per year. So that's $6,000 per year, but we've only been through 1/12 of the year, or 1 month. So that's 1/12 times 6,000, or $500. All right, and let's post both of those. I'm going to check it just for convenience. There's the posting of the credit to the liability interest payable. Sorry. It started at 0 when I did the unadjusted trial balance, but now by virtue of adjusting journal entry number 4, it's up to 500, which will be the balance that we will carry forward into February, and it'll grow by another 500, and we'll make this same adjusting journal entry next month. And that's the credit that we posted. The debit is interest expense. And there it is as well. We increase interest expense with a debit, and I did so in adjusting journal entry number 4 at the end of January for 500, bringing the balance to 500, which is correct, and we will close that to retain earnings. It's a cost of us doing business. It's the cost of those funds, cost of that $60,000 of capital we're using. All right. And we now forge forward. We have now reconciled the interest payable account, although, oops, I did not post it, did I? I'm going to do that right now. Interest payable of 500 and interest expense of 500. So only now, that's what happens when you check this too early, is I forgot to do both. Good lesson for you there, but now I've earned both of those checks. And I posted it to both the general ledger, most importantly, and to the accounting worksheet. Okay, the banknote payable has a balance of $60,000. That's a credit balance for the liability, and that is correct. So we have no adjusting journal entries, and I can bring that over as the end of the month balance in the banknote payable. Now, we do owe more to the bank because we'll also have this interest payable of $500. So at this point, we owe the bank $60,500. The $60,000 loan we have to pay off at the end of its term, and already $500 for accrual of interest last month. Income taxes payable. There's one. That's an interesting one. Income taxes payable occurs because by the net. When we make income, we take the net of it, and at this company, we have the income tax rate's 30%. Okay. Well, at this point, the sales revenue is $2,500. Let's bring these over. What I'm doing here is I am simply adding the beginning balance of each of these, $2,500 credit minus any debits, which was 0, plus any credits, 0, $2,500. Here, rent revenue has a normal balance of a credit, but it's 0. But we did accrue $300 of rent revenue in the adjusting journal entry, so that's $300. The cost of goods sold was $1,000 that we recorded during the month. We have no adjusting journal entries, so it's $1,000. Interest expense, we had not accrued any, but we did in the adjusting journal entries. We didn't accrue any during the month, but we did in the adjusting journal entries, and it's a debit balance of $500. Depreciation expense, we did not accrue any during the month, but we accrued it in the adjusting journal entries. Same with rent expense. We did not accrue any during the month, but we did accrue it in the recorded in the adjusting journal entries, and it's $1,000. All right. And so right now, our net income is $2,800 of revenues minus $2,600 of expenses. So our net income is currently $200. And on that, we have to pay 30% tax. So we're going to accrue income tax expense of $60. And I did so by virtue of that entry. We now recognize income tax expense. We don't have to pay it till March of next year, and we'll pay it on the net of all the months. So if we make more hopefully we make more net income next month, and this we'll have more income tax expense, and then we'll add it to the income taxes payable and owe them more. If we have a net loss next month, it'll reduce the income tax payable that we'll ultimately owe based on all of our income at the end of the year. Okay, let's post these. There is income taxes payable, credit of $60, giving us a balance of 60. And income tax expense. There's the posting of that. Debit of 60 in the adjusting journal entry related to tax for 131.20, and that leaves a balance of 60 in income tax expense that will be ultimately closed to retained earnings. And we have now posted this, although we need to post it on the sheets here. Income taxes payable of 60, accounting worksheet. Income tax expense of 60. And so income taxes payable will have a final balance of 60 as it did in the ledger account. And income tax expense will have a debit balance of 60 as it currently does in the ledger account. Okay, we have now gone through all of the balance sheet and analyzed the accounts. We had no dividends. We don't have any retained earnings yet, but we will when we close that profit at the end, when we do the closing entries. Common stock is we didn't issue any more stock, and we didn't pay any dividends. So I think we are ready. We are done with the adjusting journal entries. There's our summary with all of it done. And just like in the TV shows, when they then show you what it looks like when it's all like they're making a meal, and they show you what it looks like when it's all done, well, I have it done for you. And here it is. Indeed, the adjusted trial balance did balance, which wasn't a big surprise to me because it balanced when we did the unadjusted, and we know our adjusting journal entries balanced. So as long as we added this correctly, added these columns correctly, the adjusted trial balance would balance, and indeed it does. Okay, so congratulations. We have now done the adjusting journal entries and then the adjusted trial balance after that. And now we can move on to preparing financial statements because we've looked at all the accounts. We've said, yep, they're correct. We've reviewed them closely. Our accounts are correct. Our balance sheet's going to be correct. It's ready for us to prepare financial statements. We'll do so in the next video. We'll prepare the income statement and the balance sheet. Then we'll have a video doing the closing entries, and we'll be done with the worksheet for the period and ready to start our next accounting period. Okay, thank you for your attention. It's very, very important process, adjusting journal entries. Once you get it, you get it. But by all means, make sure it's making sense to you. If you need to, please do this case from a start again. You can reprint it and start it over. Watch my video again, read the book again, and do some homework problems on it. Very important. And once you understand it, you'll understand it. And of course, I'm glad to take any questions in our time together. Thank you for your attention. You have a wonderful day. See you in the next video.